Welcome back to the channel. Welcome back to another backtesting episode. So we're going to continue on from our last session where one of the things that I was really happy about in the last session was identifying why I didn't want to go long. And yes, I was tempted to, but I didn't like these relative equal lows and the fact that it's highly likely that we were going to excuse me, trade below there. So the market ultimately did in the end. So that was happy enough to not get involved with that. Didn't support a model lower, but that's fine. So one of the things that I want to just quickly touch on before we get into this session is the reason. Some of the reasons why I wanted to put this session together, why I've even put this channel together, to be honest. It's not to, necessarily to attract followers and stuff, although, it'd be quite nice if people watch and take anything from the content that's going to help them in their trading journey. That is going to be superb. Now, yes, this backtesting journey is probably what is dominating my channel currently in terms of content. But fundamentally, the channel is about journaling your way to success through constant, continual improvement, evaluation, documenting your journey, identifying improvements, and being consistent with your application. And it's no different for me. That's what I'm looking to do. Now, within this specific backtesting, if you will, backtesting program, what are my aims? My aim is to be able to consistently each week within the back testing environment to successfully identify and engage in 1 to 2 trades per week. That will obviously lead to a net whatever P&L, but fundamentally that's what I'm looking to do. And part of the process is to really iron out and update my trading models accordingly with all of the things, the gotchas, if you will, as to why not to get into a trade. I want the market to present reasons why I shouldn't get into a trade, because if those reasons are not there and my model presents itself, that is the reason to get into the trade. But part of this industry is about identifying why you shouldn't get into a trade. Too many people focus on why they should. That's the wrong way to think about it. You should be focusing on why you shouldn't get in. The market should present an opportunity to you that meets all of your criteria and presents no reason why you shouldn't get into the trade, therefore engage. And that is part of the process of journaling and learning. That's why I'm journaling along the way. I have a page open on one of my other screens, which is backtesting observations, where I focus on some key elements, which are price action observations, trade entry observations, trade management observations. Maybe there's a price action analysis, before the fact. So these things are all important to help me essentially create a work stream as to all the things that I've noted that will help support the idea of why I shouldn't get into a trade. And those things that occur more often will ultimately make their way into my model and just help with the proficiency in terms of how I analyze the market. So just wanted to kind of put that out there. And as I said before, hopefully you guys are taking some key pointers, information that you can implement into your models. So with all that being said, let's get into today. Now, let's first off identify whether we're actually going to trade Friday. And I'm inclined to do so. So I'm going to have a look at the economic calendar. So actually probably not, because it's non-farm payroll. So it's NFP. Now we could, well, let's have a look. If it sets up a specific model, then let's take a look. So first things first, let's get rid of all of the hourly or 15-minute back to the hourly. We just want to clean stuff up, obviously. Yeah, that was actually quite interesting. Let me just return that back, because when we purge a H4 liquidity pool, that invariably changes this to a high time frame Kraken correlation. And that's actually quite interesting, because the market didn't quite present an opportunity. I think that was on the news. So potentially there was an opportunity on NQ. I don't think the same opportunity would have been presented on NQ, and that's actually an observation that I'm going to note down, because I have seen that before. I've also seen that in the live markets as well. So PA observation before we begin. So if the market purges an H4 liquidity pool, this upgrades, can't spell upgrades, the Kraken correlation to high time frame. Okay, simple as that. Right, so yeah, we didn't get the, we're looking for potentially the forever model lower. We didn't quite get that. That in itself classifies the inception model. Some of my models names probably don't divulge those too often, but there you go. So yeah, that's kind of a hybrid. It's interesting. So I often look at and think I should look more often at the London session. Anyway, I'm going to take that out. Actually, we can. Let's just upgrade that for now. Okay, we can take that out. Take that out for now. Take that out. Okay. And we can take that out. Right, so we're going to, I'm not going to trade the PM session, but I expect it to go lower. Wow, it's interesting. What happened at 3 o'clock? Look at that. Interesting. Okay. Right, so okay, let's get our highlight tool first and foremost. So we want this high there. Certainly looking likely where the market is drawing to. That's it. Get rid of this, close below. Could become an inversion. But what we actually have is this H4 here. And with the H4, and the style, like that. Okay. Consequent encouragement of it can be useful. That's the only reason why I've decided to add it. Can be useful just to gauge, the bodies of the candles and have they closed above. I'm just going to put this to Monday just to give me some room. Okay. But importantly, what we're going to do is I can take those off for now. We don't need those. They are aligned, but so previous day's lows in. Take this one. And then I will be going out to the daily time frame because I need to get a better visual view of what's occurring. And again, we want to be taking trades, but we want to be doing it in a manner which simulates, again, live. I'm not here just to click buttons. I'm here to learn and improve. Okay. Okay, right. So I'm happy with that on that time frame. Technically speaking, it is high time frame S&T, but yeah, that's fine. Okay, let's have a look. I mean, if we're looking at, let's be honest, we're looking at that range. We could assume the market wants to trade down into here, right? Yeah. But we'll have to see. It's a shallow run. Still finding support here. However, remember what we said about this. It needs to take out liquidity pool, especially on the H4. But anyway, so we're looking at daily. We can see that Now I've just had that stretch. Let's begin. So we're going to have a look at Friday because it's NFP. Okay, so IOF could have shifted bearish. Okay, so with ES appearing to close the majority of its BISI, whilst NQ has rejected at CE, this could indicate the market seeking lower prices. Okay. So we need to be cognizant of that fact. Okay. And sort of this level here could be an immediate draw. Okay. So okay, so just bear with me. Oh, okay. There we go. Okay. So what we're saying is we could see bearish price action here because this is the first discount PDO rate that appears to be being violated. We've already seen one on YM, and if we want, we'll just reference this purely for reference. Oh Lord, I don't know why. Let's just put that. And then save it. Okay, let's go back here. There. Okay, so we have this IVG. Now I'm not using the IVG for anything, but I'm just purely putting it as reference. So we've seen that on YM. We also have old high daily, which would be okay. Again, if we looked at our levels, okay, fair, we could apply that to ES as well. So why not? Not so much for NQ because we've already got that high, but anyway. So let's continue. Okay, so we still we could still lean bullish, but again, the evidence is now starting to support that we could see near-term bearishness. Okay. So ERL / IRL. I'm not writing too much for it because it's obvious. The overall narrative is still bullish. However, this could support bullishness, but again, it's going to depend on H4 key price levels, right? So what we have seen thus far, in fact, let's just go to support the bullish narrative. Old lows. Well, in fact, let's drop down to the H4 and see, because it might not be. It's not supporting the bullish narrative. Okay, so what we'll say is relative to the H4 time frame, old highs are being manipulated whilst old lows are being displaced through. Supporting lower prices. Okay. Now, if we just expand ES for a second and we looked at it from the perspective, there's a lot of liquidity resting below here. A lot of liquidity. Right, and this could be where we're driving towards. Now, we are below the true week open, but we'll get to that in a moment. Okay, so ERL, IRL, again, we want to focus on this. We can even focus on this on the weekly time frame, because this weekly imbalance here purge external range liquidity. Look at that in discount. So if we were looking at the same thing, we're looking at these levels right here. Okay, so external range liquidity. So the market is traded to external range liquidity in the form of the old high weekly. Therefore, any high time frame crack and correlation would potentially support an idea. Seek internal range liquidity below the marketplace. So that still applies. We're just getting a combination now of high time frame crack and correlations, but we've traded above the old high weekly here and here, not on YM, but we have traded above this short-term high, this high here as well, and yeah, inversion there, but I'm not going to worry about that. But we've traded above these highs, so where could we be seeking internal range liquidity, right? And certainly looking at some of these levels could be supporting lower prices. Okay, so let's go back onto the H4 where we do most of our work. Okay, so SP, I have noted the clean and clear swing points above and below the market, referencing the previous day's high and previous day's low. This has formed either side of the true week open, and noting where near-term liquidity would be residing. Okay. Alright, so we've got this previous day's high, the previous day's low here. We do have, if we look at this one here, breakaway gap. In fact, let's just use this one. So again, we're just using this just to tell the story. We've got a breakaway gap here. Applies there. H1 Sibby's probably in that candle. Okay. Okay, so TO currently all members are trading below their respective true week open. This could support high probability longs. If coupled with an correlation. Okay. Right, so moving on. Kraken correlation. I've noted the high time frame correlation, the high time frame SMT at the highs, which was the catalyst of seeing lower prices. The market has since delivered to an H4 inflection. Therefore, I would be looking to frame a new high time frame Kraken correlation to support any trade ideas. Okay, pretty straightforward there. Right, so now we're going to move on to game plan, but now we're going to drop down. So we can see a picture. Institutional order flow on the H4 is bearish. And I'm going to add that to institutional order flow just so I've got reference. Actually, in fact, no, I'm not, because I have got it on the next line. All right, So let's drop down to the H1 and let's see what we have. Okay. Well, hang on. Before we go to the H1, do we have any? No. Okay, let's go back to the H1. So we've got an Asia high here. We want to be mindful of that. And that appears symmetrical on okay. There is a Asia. I want to say Asia low, but yeah, I guess it is. So we're going to mark that up, but it's in close proximity to the previous day's low, so high likely we're going to trade down to this level. But let's again mark up the key value PD arrays that are meaningful. This one looks as though it's just been purged. Now that's not the Asia range low, so we're just going to have to change that. Okay, so there we go with that. We do have an inversion there which kind of support lower prices, but I'd much rather see a fair value gap. Okay, so market appears to be finding support. Let me just drop back out to the 4 hour. Yeah. Right. So. Okay. Right. Okay. So let's look at our game plans for today. So we are below the 2-week open. Highly unlikely. So no particular order. Number one, at the lows. With the market being below the true week open, if we note a high time frame cracking correlation at the lows at the previous day's low, this could support the idea of near-term bullishness, near-term higher prices. Okay, that's what I'd classify as the first one. So we're looking at this area here. Now, obviously, if we find support from this SIBI, so 2, in actual fact, I'm just going to play this on to, let's have a look. Yeah, to just before the New York session. Okay, because that may change stuff significantly. So let's update our charts. Okay. And we form the London low here. Just want to go out to the 4 hour just to see what we've got. That's fine. So we've got the London low. So now we've got close proximity lows. I would still weight the Asia range as the, obviously as the larger, because it was there first. Likely holds way more liquidity. Okay, we've got relative equal lows here, which could well be targeted. So number 2. So naturally, if the market finds support lower from the CBH4, with displacement, well actually with H1 displacement, and we note an low time frame cracking correlation within, this could set the stage for lower prices. Okay, so that's sort of 2. Now we are noting price repricing higher towards the true week open. So it's quite plausible, just going out to the 4 hour, that it's quite plausible that we could see the market trade higher to there. Now, I doubt it. I doubt we're going to go that high. I mean, it could sustain a move higher. I highly doubt it, but nonetheless. So we've got symmetry at the CBH4. I'm not noting any other. Let's just go to the daily. I'm not noting anything on the daily per se. H4 time frame. Obviously, we are in the CB itself, so I'm not really noting any other model. Yeah, I'm not really noting anything. I'm just going to check H4 from the lows. Just want to make sure we don't have, and I don't believe we've got another cracking correlation here. So we've got symmetrical price action. So I would anticipate further lower pricing, and then it's going to become a case of how we get involved. Now, again, if we see a cracking correlation inside of that CBH4, that could support. And that actually, that is interesting. I never mentioned that. So if the market, forms and high time frame cracking correlation within the CBH4 in the form of either PDA, SMT, or high time frame SMT. This could support a move lower. Okay, so they're the three. They're the three I'm looking at. Any cracking correlation within here. If it finds support here, trades down, forms a H1. If we had cracking correlation there, and I should just make the note in that one. And we know a high time frame cracking correlation within in the form of either a there we go. So we've got three potential models that we're looking at. Anything outside of that, I'm not really looking for. Now, remember, all trades today, because it's NFP, would need to be taken on the H1 time frame. Okay, that's important. Important to note because of the volatility. So, in actual fact, that might eliminate certain models, but we'll see. Okay, so I'm going to stick on the hourly. I'm going to change this to the 5 minute. We're going to play. Actually, I can't necessarily stick to the hourly because. So we've got a bit of news. We're going to do what we normally do. Okay, so we've got that there. And another one of those. It's 10 o'clock. Oh, why is it doing its usual? Oh, Jesus Lord. Why does it do this? It must be a bug with the system. Well, that's worked. Okay, so we're going to stick with the 15. We're going to work our way towards NFP. And as soon as we get to NFP or just before, we'll take stock of what we think the market is likely to do. Where are we? So I'm going to go to 8:15. There we go. Let's just go back out to the hourly now, just so we can get an idea. Okay, just H4. It does appear that for some reason the market wants to seek higher prices. I'm not entirely sure why, but this level could be of interest. Just going to mark something up here just so I've got it referenced. Does not mean that I'm engaging in anything or any of that sort of stuff. Just purely want it as a reference point for now. It might mean nothing. Yeah, okay. That's fine. Okay. So as far as I'm concerned, nothing has really changed by way of price levels or anything of that nature. Price can continue to reprice in here. If we look here, there was a breaker. It did trade below. It's not yet a signal for me in any way. Okay, so we're just going to stick on the hourly. Okay. So now we've got NFP. So just want to just update some of our markups. Oh, oops. I don't want to do that. So that's New York. Okay, just want to do that. It's kind of on NQ traded quite high into its SIBI, so that's concerning in terms of lower prices. Now I want to just venture out to the 4 hour. So there's nothing going on in there as of yet. Would want to see if we get a H1 displacement. That could be key. But we'll see. Okay, so we're coming to the close of this candle. Currently, as far as I'm concerned, there isn't anything to do. Potentially, obviously, SIBI forming here. Potentially, we can mark this up as a potential PDRA. No, I didn't want to do that. I'm not going to annotate anything inside of it because currently we don't know yet. So going to continue. I'm just going to drop down to the 15 because I want to see equities open. I'm going to drop this down to the 1 minute for now. Just so we can see what the market is doing. to the hourly. Well, we can see that that has been closed in, so we've got no hourly SIBI here, so we can get rid of that. We can keep the SIBI here on ES, but it's not looking, in my opinion, favourable for a trade idea as such. Purged essentially the London low, not the Asia yet, so again, nothing that I'd be sort of fixing on right now. Just going to check the H4. Nothing here. Okay. So stick with the M15. Let's continue. That's interesting. Again, we are on the M15, so it's not a case of so we're waiting for potentially 10 o'clock. Be the next. So it's certainly NQ is going to take out that low. That's what that would imply. Highly surprised if it doesn't. There we go. Question now. I actually think it could well trade lower to. I want to go out to the hourly. We haven't had a. Let's see, low. 93150 high. 32. So yeah, no fair value gap there. So certainly seeing the continuation lower. There's no cracking correlation within here. Markets repriced lower. So yeah, nothing to me that would signify a trade idea. ES is way too close to that liquidity pool. Okay, so ES has now purged. However, the divergence is with YM, so it's now important to see if YM wants to trade above its bearish order block. But also at the same time with YM, it has taken the liquidity here, so it doesn't need to take here, but I suspect it will, because I suspect that the market wants to continue lower. So I'm just going to go out to the hourly. Potential fair value gap here. We can just grab this. It certainly looks as though we're going lower, in my opinion. Now, this does not necessarily mean fair value gap. I'm just basically referencing a potential gap. It's not necessarily the gap. So we've seen that the liquidity's been purged. Let's continue. It could absolutely close in everything, or it could continue lower, and well, YM is the key, because until this forms it was that candle where, yeah, and no offense, NQ still hasn't, so there you go. See? So let's go back out to here. It's not looking likely we're going to get anything. All traded below, so personally think this is just continuing lower. I'd be surprised if we got any opportunity to do anything. We can all see clearly where this is going. Wonder if NQ will present an opportunity. We'll see. Unlikely now. Be interesting to see what happens at this level. That level. And that level. This hasn't been confirmed yet, so we've still got plenty of time where this could change. See, so as you can see, it's traded. If you go to the 15, it's traded further into there. So this level goes. This just becomes that little bit smaller. We'll continue. Okay, that's closed it in now, so get rid of that. So yeah, not looking likely to do anything. Closed in the anyway. Let's continue. It's outside the trade window now, so you know, not going to. I would suspect further lower prices, but you never know. We'll go up to lunch. NQ certainly wanting to reprice lower by the looks of things now. There we go. Oh, we know. As I said, it was obvious in terms of we know where. Oh, why is that not stopping? Breakaway. Fortunately, fair value gap here. Where there. So yeah, no opportunity here, fortunately, for me to get involved. Some would say, oh well, why don't you use the M15? Well, I could, but at the same time, remember it does bring further complexities to your trading when you do those types of things. So anyway, we're going to continue this on to midday, and then we shall leave it there. I suspect that the previous day's low Q1 will eventually be taken out, but yeah, unfortunately, no high time frame. There we go. No high time frame model for us to frame, or low time frame model. We had very clear um very clear game plans. We were unable to execute on any one of them. Unfortunately, they were sort of ruled out as and when price approached certain price levels, which is fine. It is what it is. So we keep it moving. But again, what we identified was reasons why we shouldn't get into the market. We were very specific with our models. We were specific with what we wanted to see, specific with where price was and how that would relate to the model. The market didn't present anything, therefore we do nothing. That is trading, and then we keep this moving. I am confident that I will get to the point where I'm identifying one fantastic trade, maybe even two per week. That's where I want to get to. That's what's going to bring profitability. That's what's going to bring consistency. And this process is going to allow me to do that. So hopefully you enjoyed this episode. You took something away. Hopefully what you took away was how I went about identifying the market, having some strict rules, informing what I wanted to see in order for me to engage, what I didn't want to see as to why I wouldn't engage. The market didn't offer anything, therefore no trade taken. Hopefully you enjoyed this. Hopefully you took something away. Again, if you're liking the content, please hit the like button. And, if you'd be kind enough, if you want to follow the channel, be a subscriber. Would really appreciate that. So with that being said, I'll catch you guys in the next one.